Hello, everybody, and welcome. I'm Bonnie Halper. I write the weekly Startup One Stop newsletter, and I'll put the link in the chat. I also work with founders on their pitch decks because they don't know how to properly. No founder knows how to properly put together a pitch deck. Am I right, Katie, or am I right?
You are right.
Yep. And we host online investor insights every 2 weeks. And today our guest is Katie Weiss. But first, I want to thank Joseph Katz for hosting us. Tell us about you, Joseph.
Thank you, Bonnie. Welcome, everyone. Good to see lots of familiar faces. Hope everyone enjoyed their summer. Keep this short. Joseph Katz. I'm a startup marketer. I help companies go from unknown to well-known, utilizing some of the best and sometimes overlooked marketing strategies to help them grow their businesses and build go-to-market strategies and plans, mostly focused on customer acquisition and measurable growth and ROI. So if anyone wants to chat, I put my information in the chat and suggest everyone does the same.
Thank you. So Katie is our guest. It's always wonderful to see Katie. Katie and I go way back. So Katie, we always had the attendees introduce themselves. You want to talk about yourself first, or you want to have them briefly introduce themselves so you know who's in the room?
Whichever way works best for you, Bonnie.
Either way. I know that some people, we know that. All right. Eric, why don't you briefly introduce yourself since we know that you have to leave early today?
Already did. I'm the founder and CEO of Millimatch, and Bonnie and I go way back also. So thank you for always inviting me here. And Katie, it's a pleasure to meet you.
And thank you for showing up. Carrie, you want to introduce yourself?
Sure. I'm Carrie Fox. I'm the founder of Stealth Pictures. I'm a producer, writer of intellectual properties, currently raising funds for my upcoming production, which is David Bowie Loves New York, which will feature his band, his celebrity friends, and different kinds of performances.
Oh, thank you. Yeah, we try to keep introductions short. Eric Weiss. Oh, Eric, you're muted.
Hey, everybody. So, Bonnie, I haven't joined in quite a while. Sorry about that, but I am a fund manager raising a fund using generative AI to bring back legendary musicians. So maybe David Bowie might be a good target for me.
Yeah, we should chat.
You guys, you should, yes. So I hope I don't butcher anybody's name. Gazella.
My name is Ratale.
Thank you.
But you can call me Gatsale. Yeah, it's hard. Yeah. Can you hear me, right?
Yes.
Yeah, okay. So I am a university student, and me and my friend actually were working in an ongoing startup. So that's why I'm here.
Where are you based?
Getting help from you. Yeah?
Where are you based? I'm just curious.
Where I was?
Where are you based?
In Italy.
Oh, nice. Oh, I'm jealous. Lon Taylor.
Hey, everybody. I am Lon Taylor. I run a company called First Insights, which is a user experience research company. So we do lots of qualitative research for both big, giant Fortune 500 companies. But I also love helping startups. And Mary was nice enough to invite me to her podcast where we spoke about how important UX research is for startups. And Bonnie and I also go way back.
Oh, you should put a link to the podcast.
Yeah.
Yes.
I will do that.
So Mary, since we're talking about you.
Hi, I'm Mary Scott, originally from New York and currently in St. Louis, working with the startup ecosystem here. I'm so glad that Bonnie does these things, and I include her in my newsletters every week to my local books. And thanks again, Lon. You did a great job. I put the link to the podcast in the chat.
Thank you. Mohammed.
Hi everyone. My name is Mohammed, and I'm a robotic engineering student in Italy. So for now, I'm working in some different startup as a founder and co-founder, and I'm here to grow my networking and maybe see some investor. I don't know. Yeah.
One of the partners in the fun Katie's with calls himself the Robot Rabbi.
What kind of
Yeah.
robotics?
I have been working in different kind of robot, a mobile robot, a drone, and underwater, and also the manipulator, the KUKA and ADD especially.
Very cool.
Oh, Yoni, why don't
Thank you so much.
And why are you asking about robotics in particular? I'm just curious. Yoni, take it away.
Yeah, I am the CEO and founder of Margin in New York City. Spent half my life in Israel. Big fan of Katie and FF. And hi, everybody.
Hello. Scott Purdy.
Good morning, Scott Purdy with Sine. I'm based in South Jersey, outside of Philadelphia. I'm one of the founders. We have a project that's going to bring in multi inputs of video and audio and make a completed movie once it's done. I am babysitting today, so I'm probably mostly going to have my camera off. I got a noisy 2-year-old. I am also a part-time actor, and I've been doing a lot of acting stuff recently as well. I'm always happy to be at these meetings.
I'm always happy to see you.
And
Too
two-year-olds are always welcome.
Your daughter turned 3 right after you spoke, and that's right. I remember that. And I told you what my sister said. When they're 2, everything is no. When they're 3, everything is no, and they mean it.
Sure.
Tushar.
Hi, hello everyone. I'm Tushar. I'm founder of Bao AI. We are based in Germany, but we are an American entity, of course. And yeah, we are building AI agents for the construction industry. We are a team of exited founders and people from Techstars, and we have an advisor also from Stanford. And yeah, looking right now, we plan to do a first round, and so that's the reason I'm here to get investor insights from you guys. And yeah, looking forward to the meeting.
Hey, welcome. Mel.
Yeah.
Sorry, I'm driving right now, so I don't have my video on. Mel Barsky from the Center for Aging and Brain Health Innovation. I'm a partner of a venture fund we run here called Cabby Ventures. Nice to meet everybody.
Welcome. Ian, good to see you.
Sorry to be late. Yeah, so I'm Ian Garmez. I'm in Toronto. I'm the COO of a company in LA called Virtual Film School. We help companies market their services and products with short form videos. That's what we do.
Henrik.
Yes, good morning. Henrik Leborg. I'm a fractional CFO, also in Toronto. So I help startups and scale-ups, mainly in the tech and business services industry.
And welcome. And Alex. We always have to ask Alex where he is because he moves around a lot. Take it away, Alex. You too.
I do. Although it doesn't feel like I moved recently, but I'm Alex. I'm a first-time founder of a fintech company, specialized in agentic AI for specialty lenders. And I am in sunny, or actually not so sunny, it's a bit overcast, South Florida, Boca Raton.
I'm jealous.
Although
Katie.
next week I'll be in London. So if anyone's there or here, happy to meet up in real life.
Okay. I'll be in LA. Katie, take it away.
So I'm Katie. I have 7 years of venture experience, 7 years of venture adjacent experience, whether that was working with startups like with Yoni or working at Salesforce, building out the first ever startup and venture capital programming. And recently came back to the venture side as a principal at FF Venture Capital. And what else do we need, Bonnie?
Oh, so what are you looking at these days? What are you investing in these days?
Yeah, so right now FF FF historically has been a generalist fund. So we have funds based in the US out of New York, and we have funds based out of Poland in Warsaw that mostly invest in the Eastern Bloc. I only work on the US fund. So we're going to ignore Poland, even though it's a really important fund. I just don't work on that side. So for the US fund, our newest fund is going to be focusing on the manufacturing and energy sectors. So I tell people think drones, robotics, AI, SaaS, electrification. If you're selling into manufacturing at something or into something to electrification, we're potentially interested.
Oh, cool. So what size? I know you invest early, and what size checks, and then you do follow. I know. I should let you talk because
Yeah, so we go down to sometimes the ideation, sometimes we require revenue. It really depends on the product, the company, and everything that's going on. First check-in is going to be about $1 million for this new fund. But we're saving a majority of the fund for follow-up investments. So not only can we lead seed rounds, but we can also lead the A's and B's afterwards. So we're very active and involved investors once we get involved in a company.
and you guys lead too.
We lead and we do take board seats. We typically require a board seat.
No, it's not always easy to find a fund that leads.
Yeah.
So questions.
Yeah, I'm an open book, so anyone have questions?
What's your general process like? What are you seeing in the market that you truly like, and what are you seeing that you don't like equally well?
And how come you didn't mention AI? Everybody's talking about.
I think I said AI. I like AI.
Okay.
I will say I get sometimes particularly annoyed when I get pitched by health or sector companies that we explicitly have never invested in. Now on our website, it doesn't say our new venture focus. We will be updating that soon, but there's a reason why it hasn't been updated yet. But we don't invest in biotech companies, and I get an email from biotech company probably every 8 hours, multiple times a day. And if I see the word biotech in an email at all, I immediately say, thanks, not a fit for the fund. We will never invest in a biotech company. We're not experts in that area. We don't have the knowledge base to make those type of investments or be a smart investor in those spaces. What I like is when people do research on us and are able to send us things that really, really make sense for the fund. And I get excited when you introduce me to an industry that I did not realize existed, or product or space I did not know about, because I'm going to fully admit I do not know everything about the manufacturing space. I definitely don't know everything about the electrification space. I was just sent a company that's proposing to use lava to generate energy. And very fascinating in how they can potentially do this. They might be too late stage for us, but we're still digging in because it's a really fascinating product. So the more you can teach me, the more you're an expert. And it's not biotech, I get very excited.
Yeah, that's the first time I've even heard of lava.
Right? They're going after their Series A, so it might be a bit late for us to join in, but we are curious.
I'm curious too.
Yeah. I think Mary's got her hair. Alex, I'm not sure if I answered your question, but you can always give
Yeah,
after Mary.
but you also mentioned in your introduction SaaS. So how do you see SaaS fitting into the manufacturing and electrification kind of thesis?
So there's definitely new ERPs and softwares that are being developed to help people somewhere in the supply chain. Anything in the supply chain in my mind is manufacturing. So, with manufacturing rejuvenation happening in the US, the only way we're going to successfully compete on a global level is if there are new ways to run businesses, ways to reduce labor costs, ways to reduce inefficiencies. And anything that can help with one of those three categories is really fascinating to us. So, if you find a real pain point in the process, we want to learn about what you found and what you're doing.
I was going to suggest that when you update your website, you put in all caps somewhere. We do not invest in robotics. I mean, in
No, we
biotech.
love robotics. We love
No,
robotics.
no, I know. I know, in biotech, just, I mean, since it's such an irritation point there.
I think it's more an irritation for me than anyone else because
Okay.
we've never invested in biotech. The people who send me biotech deals have not gone to our, like, don't do research on who we are. Just like when I sometimes get like really late stage deals and I'm like, we're not gonna come in on a series D or pre-IPO round, but like it's just simple of like just Googling who we are and figuring out what's best is just it's I don't want to get a spam email that you've sent to every investor in the US sort of thing. I would like it to, show a little bit of thought if I'm going to show thought back. But Mary has a hand up, so I'll answer your question.
Yeah, I have actually two questions. The first one is, what's your favorite success story?
Oh, favorite success story. That's always tough. All my babies, all my investments, because I've been in the space since 2010 are my favorites. Just like both my kids are my favorite. One company I think that was particularly interesting that I think was very successful was Clout. And I don't know if anyone remembers Clout, but Clout was,
I remember them.
yeah, I have a shirt upstairs to them. They were one of my favorite companies. They were the first company that tried to measure influence on the web from social media perspective. And they give you a score. And then they divided that down by topics and told you how to be more influential in the places you wanted to be. I mean, absolutely fascinating. No one was thinking about influential marketing. It didn't exist. Then they started to turn this into a profitable venture by partnering with brands who would send people who are influential on certain topics, boxes of things to try. Unfortunately, Facebook, they were acquired, they were doing really well. And then unfortunately, Facebook, LinkedIn, and a few sites limited their access to data all at the same time. So the acquirer had to shut them down. Influential marketing now exists though as an entire category, and they were the first player in the space. And that was a successful exit for us. So, we're still happy about it. But I still miss my Clout score. Still miss my
I remember that. Wasn't that Mark Peter Davison? And I remember it was Cloud with a K.
So Mark Peter Davison, was he identified? He was in the portfolio at one point. But no, the CEO, I mean, he might have invested in it, but the CEO was Joe Fernandez, who's now running another business I think is absolutely fascinating as well, that we're using as a product, but we have not invested in him because he's outside of manufacturing and energy. So we can invest, but otherwise we would have heavily considered it.
Oh,
Okay, and I have a startup who's turning river current into electric current, and I'm wondering how he should contact you.
LinkedIn, my email is katie@ffVC.com. Always curious to look at innovative new products and how people are doing stuff. Now, if it's similar to hydroelectric dams, not rams, then yeah, but I was gonna say if it's something innovative and new, I want to learn about it. Send it right over.
ffVC.com?
Yes, or you can find me on LinkedIn under Katie Weiss. I do respond to every LinkedIn message. I will add anyone who adds me on LinkedIn. I'm very easy to get in touch with, by the way. A lot of people don't realize that. I will read every deck. I don't respond if I can tell it's copy and paste, but I do read every deck that comes my way. Every deck. I'm gonna mispronounce everyone's name, so Bonnie, I'm gonna leave that to you.
Oh, Tushar, is that who? I see his hand up next.
Hi, Katie. So we are basically, I just want to explain a little bit about our stage. We have a paid pilot customer right now, in Germany, of course, but we are based in as a delivery corp operating out of Germany. What would you suggest in our stage? Should we now start looking for funds, or or should we get more pilot customers or launch directly? What do you suggest?
So the more paid clients you have, the higher ARR or MR is, the higher valuation you're going to get. So I always tell people go after venture funding when you need it, not when you want it. So particularly early stages, later stage for growth and stuff, you can kind of readjust. But I think at the early stages, my advice would always be wait as long as possible until you absolutely need the money, noting that it will probably take 8 months to fundraise. So if you think you're going to need the money in the next 8 months, like start now. But the more revenue you come to, the higher valuation you're essentially going to get, or the more interest you're going to get from venture investors. But I said we invest down to ideation. So I think there's never if it's the right move for the company, then it's the right timing. If that
Great.
makes
And
sense.
what would you be also interested, because we are also in the same space, inefficiencies and solving these pain points for the construction industry. It is an intersection between sustainability, supply chain, and construction, because everything goes hand in hand, I feel. And that's a vision eventually.
Well, I'll tell this to everyone on here. If you if you work within the manufacturing energy space and you can make an argument that you do, you are welcome to send me a deck. I am happy to review it. But I wouldn't be able to tell you on this call without looking at further materials. And yeah, so I'm happy to take a look at a deck and see what you guys are building.
Thank you.
Awesome.
Godzilla.
Yes. I just wanted to know, how do you feel about robotic and elderly care? So that's I am actually me and my friend are working. It's about robot that care for elderly people.
We like robotics in all forms. We like hardware in all forms. We're not so 10 years ago, it was very expensive to build a hardware company. It was.
Whoa.
15 years ago, or maybe a little bit more than that, 17 years ago, it was really expensive to build a software company. But then there was this new invention or this new wave, which was moving to serverless systems using cloud software. When AWS came out, Google Cloud, it became immensely cheaper for people to start a company. In today's environment, because of innovations in technology, it's much more affordable and much more cost effective to build a robotics or a hardware company. And we've been making robotic investments since probably 2015, 2016. So we're not scared of them. We actually really like them. We think there's a huge market in the hardware market, and there's ways to build it in cost efficient ways. So very interesting to us. And it's actually a good time to be in those markets. There's a lot of interest in New York, at least, for that type of technology.
And would you be interested to see our pitch deck also
Yeah.
to know much better?
Yeah, I can't tell you if I'm interested in a particular company unless I see a pitch deck. So anyone here, Katie at ffVC.com, you are welcome to send me a pitch deck. I will tell you, I say no a lot of times because I know what the partners in us, what we want to see, but I'm very happy to review it and see if there's either myself or someone else I know might potentially be interested.
Okay, great.
Awesome. Ian.
Yeah, hi, Kitty. I'm just curious if you've invested in a company called Anduril. Very interesting drone manufacturer, lots of other advanced defense technology. I've been reading a lot about it recently.
So sadly, they're not in the portfolio. We do have some great drone companies like Skycatch and US Avionics. But I don't think Anduril is within the portfolio. Well, I have to rephrase.
Okay.
I know they're not within the portfolio.
Right. Okay. But so, like,
Um,
are you mostly looking at smaller robotics companies, or ones that are already really up and running, or?
So US Avionics, we invested in an ideation stage.
Oh,
We
okay.
founder, we will come down to, he literally, here's a founder we knew, and he says, I have an idea. And we said, cool, here's some money, go after it.
Mhm.
Very small check, by the way, but we gave him money. So we had the ability to invest later within that fund's investment cycle. So he's in our previous fund. So yeah, we will go down to ideation stage. We will go to the point where you have multitudes of revenue. It really depends a lot on valuation for us, where we kind of categorize you in like stages. So at a certain point, the valuation will become too rich for us. We're very valuation sensitive. So we typically, I mean, it's hard to kind of say because we invest in the robotic valuations versus software versus AI. They do vary, but we try to stick with companies that we think the valuation really makes sense to the company.
Mm-hmm. And do you also think about the growth? I mean, typically hardware companies don't grow at the same pace as SaaS software companies. So
Yeah.
how does that figure into your investment thesis,
So we need to make sure the company itself is going to be able to raise the capital needed for a hardware company to be successful. So we look at different metrics for hardware, drone, other companies where there's going to be additional costs that just won't exist in a software business. But that evaluation kind of happens during due diligence more than like during first meeting, because a lot of times we believe that the founders know that it's a more expensive business to run. So you know, it's something that the partners focus on a little bit more than myself, to be perfectly honest. So I'm normally just I need to be just get excited about a product. Everything else is details for me.
Got it. Okay. Well, thank you.
Then we take a product and the team. The team is so damn important.
Right.
Yeah.
Right.
I wanted to add that Andrew is Palmer Lucky. I won't say his new startup because he's been at it for a few years, but if we all remember him, which some of us do.
Yeah.
Gisela. You have your hand up. I
Yes.
didn't follow on
Yes.
question.
Again, sorry, I have a question. I like for your investors, for months early your invest, like without MVP also. So because we don't have MVP right now.
Yeah. So we'll go down to ideation stage, which is literally, hey, I have an idea. Some companies we require an MVP because of the complexity or because we just want to see it get a bit further. It's really going to come down to you know, the product and the team. If this is a team that's done it 5 times before, we probably will go earlier stage with them. If it's, you know, people out of college, they have an idea, but they don't have a product, it's hardware, it's complex to build, we're going to require a little bit more. Now there are investors that come in before us a lot of times. You know, there's the angels, there's pre-seed funds. There are folks who invest in that stage. So you know, I'm not saying no one invests in that stage, but depending on kind of the team and the product, we kind of make a, you know, a gut decision on what we think is best.
And so in my team, there's me that I'm designer and another person is robotic engineer, and we have a good advisor from the like for the economy, and some from one from IIT is robotic organization very important in Italy. So we have a great team, but we don't have a MVP. So
It's so once I would need to do it as like I would need to talk with you, look through the deck, get a greater understanding before I could give you more information there. In a room like this, like we have different founders, different levels of experience, and you know, I try to get to really know people before if we're gonna move forward with something for sure.
yeah, I understand. Thank you.
So I wanted to comment, since you say that you look at every single deck that everybody emails you, and I know that you get a lot of them every single day, Katie. How much time do you typically spend on a deck? Because founders need to know this. They work their heart, and so they put everything into the deck. They went slide after slide, and I keep telling them, keep it short. You know, don't bury the lead. So tell me.
30 to 90 seconds.
Okay.
30 to 90 seconds. But by the way, you lose me in 30 seconds if your first couple slides isn't problem solution.
Right.
And then why I should be excited. And I hate to do this. I was talking to someone via LinkedIn. They sent me a message. I said, look, it's not in our space. I said, can you give us advice? I said, my advice is problem solution, follow the normal format. And they turned around and said, well, this is what makes us unique. And this is what's going to get us funding. I said, no, your product is what makes you unique. What you're building is what makes you unique. This is playing a game. And he had sent me a deck about how VC like to like correct me. And the guy literally said, like, don't play games. I'm like, exactly the video sent me, don't play games. Your product is what should be unique. There's a reason why this formula works. I get so many decks per day, and I only spend about 10% of my time reviewing decks and looking at potential investments. The other 90% goes supporting our portfolio in the fund. So, and that's everyone at the fund, like 10% max looking at decks. So the average VC will spend 30 to 90 seconds on a deck. And if we're excited, you get the 90 seconds. And then we'll quickly email you without reading the whole deck. We want to get on a call. We will know very quickly, is this a problem and a solution? Are we potentially interested in? And then we want you to tell the story, because the deck is just paper. It is very important. Don't take me wrong, but those 30 to 90 seconds, you have a very quick time to lose our attention or get us excited. I wish I had more time to put into decks, but I know in that time frame what I like and what I don't like.
I just wanted to clarify that.
And also make sure there's no spelling mistakes and check the grammar, because if I see a spelling mistake, that's laziness. And I mean, I'm dyslexic, but I make sure to fix most of my, like, if it's obvious to me, then I do get this all the time. I'm like, it's just, it grinds my gears.
It's so easy to take your deck and throw it into a AI tool and have it spell check it or grammar check it. So no excuses for sure.
Exactly.
I want to comment that AI is really bad at grammar. As somebody who went to Rutgers Prep, when they drill grammar into it, really.
I use AI to check my grammar. I'm only going to notice a mistake that AI doesn't catch. I'm dyslexic. Like,
It's going to catch the major stuff. I'm sure it's not perfect, but it'll catch the major stuff.
Yeah. Awesome. I see Alex has his hand up.
Yeah, so you mentioned valuation. What's your general sense of, and view of valuations over the past year or so with respect to AI, SaaS, other sectors? Are they going up, down? Does the general market impact them at all?
So I've been back in venture literally for a year now, or 11 months and about 11 months. So I can tell you that the valuations I've seen over the last 11 months have actually been very fair and very equitable to both founders and investors. An unhealthy valuation only hurts the business in the long term. So if you go out and raise money on an inflated valuation, you raise your Series C at a $20 million valuation, but you really should be worth 10. When you go to your next round of funding, in order not to absolutely squash everyone and get a fair valuation at that point, you have had to hit such tremendous goals, which most companies are unable to achieve. So the valuation, one of the reasons we're really valuation sensitive is we want to make sure you're setting yourself up for a really good series of funding following, like after us. Because if you go out and say, well, now I have to raise 20 and 100 million, but I'm a consumer product that normally doesn't, and I'm only making $1 million in revenue, like you're not going to get those multiples. Even if you have really great growth and this and that. So like you have to really be conscious of like, the reason we're valuation sensitive is because of what happened in like 21 and 22, where the valuations got so inflated that follow-up rounds are basically impossible without completely doing a recap, which is what some companies had. A lot of companies had to do a pay-to-play or a recap. And we didn't participate in any of those rounds. We acknowledged at the time that these are unhealthy valuations. We guided most of our companies away from them. And that's actually why, like, I mean, look, 5 times our companies get Series B funding compared to the average VC. 11% of our companies have over 100 million in revenue. Our companies do really well because we guide them through all these things. When you're looking for we're very involved investors. When you're looking for your next round of funding, you come to us and we help you strategically think of the dollar amount you need and the valuation that makes sense and everything you need. So you're going to swim past due diligence with all the other funds. That's just so like there's a reason why we have a sensitivity towards it.
Yeah. And do you have a feel for price rounds versus safe structures?
So personally, I prefer price rounds when you get an investor in because you have aligned terms from day one on what their stock is worth and what and like there's no sort of mismanagement. There was one company we invested in a long time ago, and we did it on a note, and we did it like a $4 million cap because that was what made sense at the time. It's a really early stage company, and then they did phenomenally, and they raised 10 on 40. And guess what percent of the company we were going to obtain from our very small investment at the $4 million cap? An absolutely unfair amount. So because of who we are, we actually did give back. We made some adjustments to the terms to make it more founder friendly. So we did not take all the basically the founder stock away from him at that point. And we did make sure that there was an allocation. Like we basically post round increased our cap in a sensible way. Most people won't do that. Now that being said, we do invest in a lot of safes. Sometimes they're cheaper, they're more affordable. If the cap makes sense, it is a good vehicle to use. When they first came out, I was a little wary of them, but I still prefer equity rounds when you bring in institutional investors. Aligned terms it just solves that like future problems.
I spoke with Adeo Resi once, and Adeo came up with the whole concept of safes. I don't know if you knew that or not. You knew that. You know,
Safe
yeah,
spaces. I was Benny, I've been around forever. I
I
remember
know. Of course you do, and I
when
knew
they
you
first
did
when
that
they
too.
first came out, and everyone was
Yep,
like, "What is this vehicle? No one's gonna
right.
safes aren't safe." They are safe.
No, but he meant it exclusively for very early stage companies, because remember, Founder Institute is back of the napkin. He
Yeah,
meant it for very, very early stage. So
yeah.
but
As
it,
long as like we do invest in a lot of stage. I have a slight preference. My preference is kind of like, 55, 45%. Like I think it's either way you don't go wrong if you have, very aligned terms with your investor. The other thing I'll say is like if you get a term sheet and it's like a page and a half, be wary. And a lot of people don't realize this, but you don't know what terms they're going to try to put into the final documents. Our term sheets are something like 25 pages long. And the reason why is we predetermine like everything on our term sheet. So when we get to legal negotiation, you know what rights we want, like information rights, like it's already in there. So it's not as much of a shock. Like we have very founder friendly terms, and we put them up front. A lot of funds, when they give you very short term sheets, there's a potential that they're going to try to screw you over during the legal negotiations after you've signed it and said goodbye to other term sheets that you have. So we've seen big and small firms kind of use that. And you got to be careful. You got to be careful with a short term sheet because VCs and lawyers know that founders don't know a lot about what's actually on the term sheet, which is why we want to make sure as a founder friendly fund, we are informing you very early on of what a typical standard good term sheet looks like.
and there are funds out there that are not founder friendly, and I've heard stories. Oh my God.
We won't name names because this is being recorded.
Oh,
And
I
also,
won't name names either. Don't worry.
but they're out there, and
Oh yeah.
sometimes you can negotiate them to be founder friendly, but you make sure you have a good lawyer.
Oh yeah.
Always go with good lawyers.
Absolutely.
Ian, got a good question for me?
Well, yeah, but also drones and other kind of products, military products, often there's a large government expenditure involved. Like maybe so how do you take that into account when you decide whether to invest in a company? I mean, do you pay close attention to that?
We look at, so we have a drone company I just did diligence on, and a large part of the diligence was about air rights and what sort of waivers that they're actually selling into the military space. So what would they have to do with the FAA in order to get clearance? And by the way, they sent me a lot of stuff that was correct and they know what they're
Yeah.
doing. I'm hoping the expertise is going to come from the company themselves. If they know what the burdens of their particular industry are, that's always like such a green flag. Like you've done your research, you know what you're talking about, you know your industry inside and out. Because the truth is, otherwise I have to go out and do all this research myself, and um it's something that we want the founders to know. So if you're in a more complex industry, expect the founder, someone or an advisor on the team or someone to actually come in with this level of expertise, and it's built into the model. So as long as it's like, you look at the projections and they're calculating for this and they're being realistic, it doesn't scare us away.
Okay. But would it help validate? I mean, if you know, let's say the federal government had made a substantial purchase or a substantial investment in one of these companies, would that make it more likely that you would invest?
It definitely makes it more interesting. More partnerships, the better. More logos, the better. Particularly when they're large, chunky deals like that.
Okay, very cool. Thank you. Yeah.
Not a
No,
problem.
I'd also want to mention that Oliver Mitchell is part of the fund.
Yes.
Oliver is the robot rabbi. Oliver has been investing in robotics and drones forever.
Yes, he is.
And I would, yeah, his expertise in the area is like probably almost unsurpassed.
And he actually just put out a book on
Yes.
the robotics space. But Oliver Mitchell, I do not get paid to say that. But Oliver is, we have Oliver and we have other experts that we bring in when we do diligence on companies in particular spaces. I mean, every venture fund is a network of advisors that they use, just like startups use advisors. to make sure we're investing in the best companies. And then there's companies like Nadivia and Anthropic, who, by the way, will actually do diligence for you. So if you're looking at a company, yeah, Mary, if you want, we can see if we can get Oliver here.
Yeah.
I think he's been here before, but
It's been a few years, and he was busy working on this book. So he said after the book is out and published, and
I'm looking for the video right now. I'll post it if I find it.
yeah. So and now I was distracted and forgetting what I was going to say. But if you want to remind me, I'm happy to continue to answer the question.
oh, you were talking about how you bring in other experts as well.
Yeah, we bring in experts. Oh, Anthropic,
Anthropic and
yeah,
NVIDIA.
other companies will actually, on their venture partnership teams, they will connect you with engineers on their team to help you do due diligence if it's a particular sector company where you need additional help for free. So we can literally get, experts across the field to help us when we hit problems that we think are interesting, but we have no idea what the company's really doing. Like no idea. Typically if we need to figure out if we can we need to figure out what they're doing to figure out if we can invest, but that's part of our process, is educating ourselves about these new cool things that didn't exist before. I mean, we invested in crowdfunding before it was a word. We invested in Indiegogo as our seed investor before crowdfunding existed. We invested in Plated before this at-home food delivery sort of like meal kits industry existed. We got to test it before it existed, as they made the first couple boxes out of their kitchen in the New York City apartment. So like we like people who invent new categories within the spaces we invest in.
Yeah, who knew that lava was a form of energy? Or I mean, it makes sense, but
I mean, but is it? We're going to be doing some research to find out. We've also seen crazy ideas, like absolutely lunatic ideas. They exist. They're so, and like we do the research and we're like, actually, no, that's not possible. Or maybe we're wrong. We've been wrong as well.
What's the craziest thing you've seen?
Oh, yes. Now I can tell my favorite story.
Oh,
I told the story before. So there was a gentleman who came to our office. This was about, I'd say like 15 years ago, and he had a device. Now he hadn't built the device yet, but he had a device. And this device he was going to send to the moon. By the way, he had no way to send this device to the moon. He hadn't figured out how to get it up there, once again, before SpaceX. And this device, by the way, he hadn't invented, didn't know how he was going to get to the moon, was going to go to the moon, and it was going to carve into the moon advertisements. So he was going to write Pepsi on the moon. He was inspired by a Will Smith movie, I forget the name of it, but he was going to do this. And then, by the way, the whole business plan was he was going to go to Pepsi and say, hey, give me my money. I put Pepsi on the moon. So did he have the rights? Did he have the contract before? No. So like, I was literally like, there are so many red flags here. Did you not like, there's not one thing in this process you have actually figured out besides the fact that I have an idea. And yes, we invest in ideation stage, but that was just a little bit too crazy for us.
That's a real moonshot.
yeah.
Yeah, we're shooting for the moon. We, after meeting this gentleman, we actually installed locks on our front door in the office. True story. True story. We were a little scared.
What was the guy's name? Elon, by any chance?
It was not Elon, and if it was, it would have made the stories far more interesting. No, we was someone who we never heard of again. But if Elon was carving advertisements into the moon, I think we would all question, if we should be buying the next Tesla or not. And by the way, I don't have a Tesla, so.
I was wondering how many bipolar medications this guy was on.
I'm not sure, but even
Probably
the way
none, as it sounds like.
Yeah.
But that's my favorite pitch of all time, because it was truly, and like this guy came in with the most conviction you've ever seen. He was like, I'm ready. I got in the VC office. We're gonna do this. And yeah, Hancock, that's the movie. So he was inspired by the movie Hancock.
So how did he get into the office? Were you just so gobsmacked you had to meet him?
I don't know, because it wasn't me who invited him in. It was one of the partners. He didn't get, back in the day, if you came and knocked on our door, we would listen to your pitch. So you might have been one of the like few people who literally like came and knocked on our door and pitched us. And also, if you wanted to work at FF, if you came and knocked on the door and gave us a resume, we would consider we would read it. We liked people with chutzpah. But I don't know if it was that or if you came in through an event or what it was. I don't remember. One of the best pitches we ever got when we did invest in this company actually pitched one of the partners at a urinal. Yeah, everyone look up. He took his phone out and he was like, so, and started swiping his phone and went through his pitch. And the partner in question said, hey, can you send this to me on like email or Twitter? So the guy at the time, Twitter was newer there. They created a Twitter account just to send him the deck. And we end up investing in this company. So there's interesting ways we've been pitched over the years. We invested in a company we found on Shark Tank. We invested in a company that sent us a blind email on LinkedIn, a copy and paste email. And we're like, wow, this is fascinating. So as I said, we read every deck we get. We might not respond to every deck we get, but we do read every deck we get. Even the men in the urinals. So please don't pitch our partners in the urinals, by the way. But
I know somebody else who got funded because he happened to be at the urinal. He just, it was an investor event. He gave up because nobody was paying any attention. So he went to the men's room, had a beer, went to the men's room, and that's how he got funded.
yeah, the guy did follow the partner into the bathroom to pitch him.
Oh, this guy did.
Don't do that, guys, gentlemen, ladies too, and ladies' rooms. Like, I would never accept a pitch in the bathroom.
Boundaries.
Right. Stalking in general, just note to self, stalking in general, not a good idea. Not a good idea.
Yes. Awesome. Other questions? We're going really off topic, but I will talk about anything as Bonnie.
It's fun to go off topic. It's fun to see the behind the scenes things that go on. And not a lot of people talk about it. So this is fascinating. Isn't everybody having fun listening to this?
Yeah. Well, I have a question, Katie, because you mentioned that your company also invests quite a bit in Eastern Europe.
Yes.
Is that, but you don't focus on that. But how do you connect with companies in Eastern Europe in the same way? I mean, just cold outreach or conferences. I mean, what do people do? I know it's not your main focus, but
we have a whole team out there. So it's not my particular focus because we have a team that runs, we call it EU Fund 1 and 2 and about to raise Fund 3. So we have an entire team based out of Poland. We're actually one of the most active investors in Ukraine and have been for years. We have companies in Estonia, companies all over the Eastern Bloc, and they focus on it. So just like we have the kind of US network built out and a little bit of the international, a few countries here and there, they've built out that network. So, but they will also accept decks that you email to, our general inbox, this and that. We both get it. So if it comes in English, we read it, and if it comes in Polish, they read it.
Okay, well, that's good to know. I mean, I do some interaction with companies in Spain. I'm giving a couple of presentations coming up, and I'm going to be mentoring some startups there. But a lot of them have trouble sort of figuring out how to connect to American venture capital firms. I don't know. They're a bit of a cultural issue sometimes. Like they don't quite appreciate the way things work in North America. So.
Yes. Our EU office only invests in the Eastern Bloc, and they help those companies eventually come to the US and they kind of come into our hands. So we do help them with that transition. One thing I will say, and this is a promotion of a portfolio company, so disclosure. But we have a company called Founder Suite. Founder Suite is, and they also have an investor product which we use. But Founder Suite is one of the best ways to figure out who you want to pitch, how you want to pitch them. It is like a CRM for folks who are fundraising. And by the way, it's free to try. So like if you want to go try it, Founder Suite is incredible. It is such a useful tool. Whenever I'm helping a company fundraise, we always go straight to Founder Suite to start building out profiles.
Interesting. I'll take a look at it for sure. Thank you. Yeah.
Hey, Katie.
We have a lot of
go on there.
We have a lot of inventors and maker spaces in St. Louis, and I'm wondering if there's a way to connect some of those with people like you who invest in manufacturing, because a lot of times people have this great idea, but they have no idea where to find investors.
So
Founder Suite, right?
Founder Suite. No, I was laughing because I was to say it's not about who has the idea, it's about who executes on the idea. And being in venture for 15 years, I'm telling you, founder-led is important. Having someone on the team who has that business sense is just absolutely key to success. Like we've seen this time and time again.
Well, they're in the maker spaces doing the prototypes, so.
Yeah, no, finding those teams. Look, I'm very happy to talk to them, and there are ways to make those connections. But we've just had, we always study, or we do postmortems on companies that are not successful. We've done a lot of studies to figure out how we can be better investors. And one thing we found is founding teams where they have both the technical side as well as the business side, someone who can really lead sales and marketing, are far more successful. But in the last 12 months, we've seen more and more companies that are just tech driven. Like, I built out this really cool tool, and I've gotten my first 10 customers from friends and family are appearing. So it's really important to have both sides of the business. But if there are people inventing things who are fascinating, like, always happy to talk and listen, join a Zoom with, the inventors out there building out amazing technology.
So my question was going to be touch on that, some of the topics you just mentioned. Earlier, you also mentioned the importance of a team and how you look at them. What are the having worked in a lot of startups, I also know the importance of teams, and I can identify also from meeting people, stay away, get into bed with kind of people. What are the things you look for? How do you evaluate the teams that you're analyzing?
So we like it if we see you've worked together or had some sort of history together, like you went to university together, you have some sort of connection that shows you know what it's like to work together. Because a founder relationship is long and fragile, and we want to make sure, like, a married couple is unlikely. We've invested in married couples, unlikely to split up, sort of thing. So we want to make sure we're investing in founders who are actually going to be a part of the business and want to move it forward. That's one of the reasons, and you guys might not know this, that every time you take venture dollars, you will have to revest your stocks. So this will happen at every round. This is a standard thing. Most founders, the first time they found out about it, they're like, what is going on? Mel, I will answer that question next. No, not at the urinal. Great question. So going back to evaluating people, the first thing is, like, have you worked together? Do you know what it's like to work together? That is not a, you've never worked together, we won't invest in you, but it's just a good to have. How well do you take feedback, I think, is the most important thing. So here's a secret for my due diligence process. If you get to due diligence with me, I'm going to give you advice. It might be the most brilliant advice you ever heard. There's a likelihood that it's not great advice. It might not be great advice. And I will, by the way, think it's great advice, but it might not be great advice. And hearing how you respond to the feedback is really important to us. We want to know you're receptive, you're smart, and you don't, like, we literally I've had people who have failed due diligence have been like, I know what I'm doing, screw you. Literally, I was saying, maybe you need an operation hire, looking at the product you're building, this and that, like, you might need someone in operations, and he was really offended by that suggestion. But if you say, we don't need it because of X, Y, and Z reason, and this is how we built the team this way, that is a great response. Or, hey, I would love to consider that. So whatever we're really measuring the response of people, and we also do reference checks and off reference checks. We will call up people from LinkedIn who you don't know we're calling to try to understand the people we're investing in. It just happens.
Your note about founders is interesting. I joined a startup, amazing idea, years ago, and within 6 months, the founders split up.
It happens more
It
often.
happens. Yeah, no, it happens. And sometimes it needs to happen, but it's not usually a good sign. And of course, that company is, it's still around, but it's not what it could be.
Same time, one of our largest companies came to us. It was a new founding team. The previous founding team was leaving. We fixed the cap table doing due diligence. A few years later, one of the two founders we invested in did leave the team. The founder who now is still with the team is leading it, and it's a pre-IPO company. So sometimes it doesn't work. Sometimes, people are really great at taking something from 1 to 0 or 1 to 10 or 10 to 100, and it just ends up being a different team. So as long as, like, it's just something we want to know. But Mel had a really, really good question I do want to answer. I don't know how much more time we have, but how do we secure LPs? It is much more difficult than your fundraising process. It is a lot of work. It's very hard. Typical funds start with friends and family and high net worth individuals they know, and as they build reputation, they're able to go to larger institutions. Right now, we're fundraising our first fully institutional fund. We have a lot of people who are at final committee and vote, and they've told us they're going to invest. We've actually soft circle priced 70% of the fund, but not one of them is actually in their mandate allowed to invest in first close. So our first close will probably be end of year. We're figuring that portion out, but it is very difficult. It's a lot of institutions, universities, state organizations, and high net worth individuals that invest in venture funds like us. It's not always easy to find them. It's not always easy to find them. It's a whole battle.
And family offices, I'm assuming as well.
We actually only have a few family offices. There are some in there. Most family offices want to use make direct investments themselves. At this point of the game. I mean, yeah, we have a couple. We have a couple family offices in there, but it was more that we knew the high net worth individual who like introduced us into their family office and got like their siblings to participate or made it a family office sort of scenario. But it came off of relationships that we have.
So speaking of founders, how do you feel about solo founders? You're talking a lot about teams, so now I'm curious.
We have solo founders. If you have the right skill sets, then we are very happy to invest in solo founders. Having more than one founder is sometimes a benefit, or having a strong team around the founder. But we definitely have solo founders.
Okay.
Mel, if you want to invest us, we can start investing in biotech, but we would not make good investments. It would be really, really low performing. It would be a low performing fund, but we can talk about it. You want to use a venture fund for their expertise. And the biotech is just a space that we don't have a lot of expertise. So just to be honest,
my venture fund does health tech and biotech. And since you don't, I was wondering if you do fund-to-fund investing, and if you did fund-to-fund into our fund, we could be your experts.
That makes
We're
sense.
only running a 30% IRR right now, so if you like.
Oh, that's pretty low.
Yeah.
Just kidding. Congratulations, that's awesome. Our IRR is a little higher, but we've been doing it for 17 years. Yeah, we don't invest in other funds. We don't have a vehicle for that right now. But I can always reach out to my network and see if there's places I can help you if you're looking to fundraise.
Any help is always appreciated. Thank you very much for considering.
Not a problem.
Is this your first fund, Mel? I'm just curious.
We are running a fund with government money. You kind of operate. I operate in Canada, and we have funding from 2 levels of government. We do early stage grant-like funding, kind of like the NIA or NIH in the US. In fact, we partner with them on a number of things. We've been doing this for 15 years. Sorry, for 10. We're on our third 5-year cycle now. With that, we have some amazing returns, and we're starting to raise our first LP fund, doing the same kind of investing or investing alongside the accelerator funds. So the companies or the LPs get an instant boost in their investment because there will be government dollars and acceleration services that help elevate these companies right out of the gate and de-risk your investment.
So one thing I can mention, and we haven't used them historically, but placement agents can be very useful if you're looking to move into a new field of LP base. So I do know some that have very good reputations. I'm happy to introduce you to. If that's something of interest.
Canada in Toronto here, and I was wondering, do you know in the US or otherwise what fees kind of average for an agent when they do this kind of work?
I actually don't know them off the top of my head because historically we have not used them. Even though we are considering it for our first institution fund, but I wouldn't know off the top of my head.
Okay, thank you.
Cool. Any other questions? I know we have a few less people here because we've gone past the 10:30 mark, but I have a couple more minutes if there's questions here that are useful to answer.
Okay, I have a. So you started out at ffVC and then you left and now you jumped back to what some people would consider the dark side. So what made you go back to a
So I left venture because 7, 8 years ago, I felt like I'd hit my own sort of capabilities and I wasn't learning anything more in venture. I was seeing great models. I was learning from the founders themselves, but I had to hit a ceiling that existed in my own knowledge base. And I wanted to go out and learn more and be able to bring that experience to future roles. You should in your career always be figuring out ways you can be increasing opportunity and not decreasing opportunity. I felt like staying in venture at that point, there was decreasing margins for my personal career. So I went out and I did a bunch of interesting things. As I said, I worked at an early stage startup. I worked at Salesforce, one of the largest companies on the planet, one of the last SaaS companies on the planet. And at each place, I learned more knowledge. Now, the reason I came back to venture, and I don't know which one is the dark side, selling to VCs or being a VC, I came back to venture because I felt like we were at a inflection point when it came to technology that was just truly fascinating. And I also had some theses that I wanted to test out in the space, including ways to reduce operational costs by implementing AI tools and new workflows within companies. And I kind of like my love for venture never went away. It just felt like I actually had more to add now to companies, and I could come in with in a much more useful and strategic way. So that's why I came back to the industry. I think timing wise, it made sense. Knowledge wise, it made sense. And now, unlike before, I'm sitting on boards. I have a very different role from when I left the venture side previously. I was doing a lot more platform work, a lot more scalable action. Now I'm helping companies with much larger problems. So, plus Bonnie means I get to hang out with you more.
That's true. I'm always happy to have you. We'll have Oliver soon. It's true. It's been years since we've had him on. Are there any more questions since we know that Katie has limited time? Here's your chance.
My kids are 5 and 3. They're adorable little girls. I'll answer any question. Bonnie, I might have exhausted everyone.
Oh my God. Her 5-year-old just started school, and I was going to have Katie speak earlier in the month, but she said, you know, school starts that day, you know, we got to get ready for cheers. And I said, oh, I'm sure she'll be fine. And Katie said, no, my cheers.
I didn't want Bonnie crying in front of all you guys when I show pictures of my daughter on her first day of kindergarten. It's a big deal.
They're really cute. I have those pictures, but I will not share them with the group because they're personal.
Important day, first day.
Yeah. Awesome. Well, if there's any other questions that people want to ask me individually, I've shared my email a few times. I'll say it one more time, katie@ffvc.com. If you somehow get my private email, which some people do get, I don't respond on that to work emails, except for Yoni. Yoni, you can do that.
And me, I can too.
Well, Bonnie, yeah, friends can do that, but otherwise, work email is best. And if there's anything else I can do to be helpful, you know, I will do my best. I do not promise funding, but I always promise I can give you advice.
Okay, so what parting shots do you have? What advice to founders do you have at this juncture? Since you work with startups all the time, good and bad.
Only raise venture funding if you actually need it for substantial growth. If you can build a business without it, it's much better to hold on to your own equity. We want your equity too if you're going to be a successful business. Why are you going to give it to us unless you need our money? So think strategically about if you actually want to go down the venture route, and do research before you reach out to a VC. Like really try to figure out who they are, try to send more personal notes. I will respond to every personal note I get. Anything that's copy and pasted, I will read your deck, but I will probably not respond unless I'm interested, which is, it's a low chance that I'm going to be interested in what you guys are building just because I know I see thousands of decks per year. The firm itself probably sees somewhere between 5 to 10,000 decks per year, and we invest in like, you know, maybe 10 per year. So statistically, it's very, very hard because we only have the ability to invest in about 10 per year. So you really have to wow us. And the deck's important. We might only spend 30 to 90 seconds on it, but those 30 to 90 seconds are your time. And it really, really use that time to like tell us very simply, there is a problem. We have the solution, and this is why you should be excited.
I'm telling you, I'm sending you a deck, and I have to copy Oliver on it because Oliver and the founder know each other, so I don't want to. So that's why.
Oh, we never get offended by stuff like that. I literally had a friendly VC in like a friend of mine who I've known for like 10 years. He sent a deck to our venture partner instead of me. And I like literally sent me on back laughing and be like, come on, dude, you know, it's gonna get to me either way.
Right.
I review all decks that come into the fund. And it wasn't a fit, but all they do is forward them all to me anyway. So
Oh, no, I just wanted to give you that heads up. So,
awesome.
anything else? Okay, Katie, thank you so much. You have to let me know next week what the two girls, what their future careers are going to be, because I know or tomorrow, because we know it's a moving target.
It is.
Bonnie, sorry,
Yeah.
I was on mute. Do you have, Katie, do you have any thoughts on something I've been seeing a lot recently, venture debt?
Venture debt is great if used appropriately. A lot of our companies utilize venture debt. Like one of my companies I'm on the board of right now is raising $1 million and then gonna take $1 million of debt. If you have revenue and you can pay back the debt, it can be very cheap money.
Yeah.
We
as a way of minimizing dilution for everyone.
Yep, most of our later stage companies, after Series A plus, all have some form of venture debt or have taken it at some point. It's a good vehicle.
Anybody else? Okay, so thank you everybody for being here. Thank you so much, Katie, for being our guest. Virtually as you were in person, which was also a lot of fun. And I wish we'd been able to record that, but we didn't have all the equipment set up. Thank you so much, and we'll see you all very soon. And have a great day.
It's great meeting
Thank you.
And for those
Appreciate
celebrating next week, Happy New Year.
Oh, that's right. Happy New Year.
All right.
Thank you, everybody.
Thanks, Katie. Appreciate it.
Have a great one,
Eddie and Bonnie.